Martins, 2020, you said it already in the introduction. A lot of things have happened, especially also business-wise with Mintos. Let's dive right into a couple topics that I have prepared for today's interview. I would like to start off with the recently finished crowdfunding campaign. Mintos, exceptional, great result. You raised a bit more than 7 million euro. Just in general, what's your take on this, and maybe also how relieved have you been about the final result? And
I think the crowdfunding has been always what we had in mind. So actually, when we look back, so over the years, we actually have seen many investors reaching out to us and without any reason, just asking like, can I buy some shares in Mintos? So when we sit down and then now look, hopefully with the crisis kind of subsiding, and we look down the road with 2021 and beyond, and basically what we looked at. So it is a good time, especially with the license which we are getting, to invest in the growth. And we put together the fundraising plan, and then crowdfunding fit very nicely with that. And obviously we are super happy for the results. So we ended up with, according to the data, which is the largest campaign outside of the UK in Europe. So as you say, 7 million, more so what I'm happy about, and what basically we all are happy is that 7,000 investors joined, and there was a lot of interest, definitely much more interest than we expected. Having said that, though, I would say we were confident that there will be quite a bit of interest in investing in Mintos equity. So overall, obviously, very good result. But as with any sort of fundraising, it's not a goal in itself, or well, it's a milestone in a way and a validation, especially when it comes from your community. But at the end of the day, it's just a tool for us to execute on the vision or on the roadmap what we have in front of us. So nothing stops there. So sure, we celebrated a bit, but in general, just get back to work and continue executing and on building a great product for our customers.
Okay, I see. There's a quick observation that I made in the past days. So I think officially it was communicated that 7.2 million euro have been raised as a peak. Now I saw in the past couple of days that this amount was lowering always a bit. So I think right now when you look at Crowdcube as of this day on December 11th, it's like 6.9 million euro, and also for less equity. So I think in the peak it was 9.45, now it's 9.28. Can you just quickly explain, or do you know why that has lowered now in the past days?
Yeah, so basically what the Crowdcube does, and that is basically a requirement by the FCA, the UK regulator. So they have to give you a cooling off period, and that's basically means that they send out an email. Okay, here's a cooling off period. It's gonna run for like a week. Until then, you can still decide that you don't want to participate. So for one or the other reason. So that's one part. And then the other is that some of the investors might not go through the AML checks. So the Crowdcube have to also check your AML. So they have to identify you. Some of investors might not be. So that's very typical. That's actually standard. I guess what Crowdcube says is you might see like even like up to 3 to 5% of total investment amount to reduce in this cooling off periods. So that's something which also that's the reason why you see that it went down from 7.2 to 6.9, I guess is today, and yesterday the cooling off period ended, so that will be the final amount basically what we will raise in this round.
Okay, good. Thanks for explaining this. I want to have a quick callback to the very first Ask Mintos Anything session that you started in March. Quite popular format then throughout the year. Back then you said like Mintos has runway capital of 3.6 million euro, which would help Mintos to continue with its operations for the next or the upcoming 15 to 18 months. Now, a recent interview that I saw that you had on the channel with Kristaps, you said like right now you have around 2 million euro cash in your bank account. To me, the question, how urgent and how immediate was that funding needed for Mintos to continue its operations right now?
It depends how you define kind of continue. So if you would want to continue and basically have a steady state and just remain where we are at, basically having the same, say, number of customers or the same number of loans available and then funded, then basically we would not need the capital. So, but that's not why we are here. So what we look for is there's much kind of opportunity ahead of us, especially with the licenses which we get, and that's gonna require capital. So, and if you look from that perspective, that we want to invest today so that we can build a better and bigger organization in the future, then the fundraising comes into the play. So from that perspective, fundraising obviously is crucial. From just running the business, well, we are more or less kind of break even today. So many of activities like today of 160 people, which we are, and our main expense are salaries. So many of activities what we do are not necessarily related to kind of maintaining the current business. For instance, the same I don't know, the same IBAN account. While it's not going to change like the current business, but we have to work on implementing that. So, or the same about the mobile app. So you could argue that mobile app is, for instance, you could run the business without the mobile app easily. So it's not going to change the current business. So from that perspective, it was not very crucial. From the perspective that we want to invest in growth and basically put to the good use the license which we are getting, then both crowdfunding and also now with the crowdfunding finished, so we are back to very active work with venture capital. So both crowdfunding and hopefully also venture capital will help us to actually take the best of this opportunity and basically invest in growth, which is something which companies or startups at this stage where we are at usually would do when they see the opportunity ahead of us.
At the beginning of the crowdfunding campaign, like the target that you set for this was 1 million euro in exchange for 3% of equity. I don't know if it was 3.15 or something, but around 3% of equity. And you gave pretty much a conservative valuation, as Mintos phrased it, with 68 million euro. Why has Mintos offered an initial discount of around 50% for that first million euro?
50% discount in what sense do you mean?
So to be in line with, let's say, a valuation of 68 million euro, yep. Normally the equity offered for 1 million euro that you wanted to raise should have been 1.47, I think. So basically, when you scale up the equity to 100%, you would come up to around 33 million, which would be like half of what you think the valuation of Mintos actually is. So to me, it seems like the first million seems like a 50% discount. Now, when we look at the current numbers that you have, like 9% equity for 7 million euro, that's much more in line with the valuation Mintos has. So has that first million been discounted with a 50% rate, or am I misreading something in this?
It's not. So all the shares are exactly the same price. So there's no discounts or whatnot or anything else. How it works is that the valuation, which you said, is a pre-money valuation. So it's basically before we raise any money. So the 1 million which we would have raised would mean that our post-money valuation would be 68 plus 1, which means 69 million. And then if we raise, so we end up is raising 7 million, then our post-money valuation is actually 75 million, 68 plus 7. So, and that's how you get also the percentages. So basically you have to divide 1 million by 69, or you then divide 7 by 75, and that gives you the same kind of price of the shares. So the missing part, I guess, is that the valuation 68 million is pre-money before we actually go out and raise money. Once we raise the money, obviously the value of the company increases by at least the cash which we have raised. So with 7 million raised, so our post-money valuation is 68 plus 7, which is 75 million euros. So there's no discount. All the shares are exactly the same price, which was set for crowdfunding at 6.12 €6.12 was the share price for any investor, was it the investor who invested the first or the investor who was the last, it's the same 6.12 euros.
Okay. But maybe there's just something missing from my understanding. But when you offer like, so you raised more funds, but gave up less equity, that's how it seems from the outside. So that's why I was a bit confused how that actually
No, we basically,
up.
what we do, we give up more equity. So how it works is basically we issue new shares. Since we issue new shares, and basically that's going to take more equity, or in percentage wise, it's going to take up more of the 100%, which is total, of course, of the equity is 100%. So at 1 million, that would be basically, we can do a quick math. At 1 million, you would give up about 1.4% of the company, or basically that million will represent 1.4%. And then at 7 million, that represents about 9.3%. It's basically the raised money has to be divided by the post-money valuation to see how much of the company the raised or the new investors actually hold.
Okay, I see. Yeah, thanks again for explaining this. To me, now when we look at the final result of the crowdfunding campaign, like 6.9 million euro for 9.28% equity, my impression is like when you set up the target of 1 million euro, obviously you have, achieved a way better result. But I was thinking, now that you gave up basically 3 times as much equity for those shares, having also that conservative valuation of 68 million euro in mind, wouldn't it have been maybe more sensible to raise less money? So say maybe, okay, we had a target of 1 million euro, but we're also happy to take 2 or 3 million euro and give up those shares, continue with the operations, understanding that there's also a venture capital round to follow, which you said would be of a much bigger extent, and just use that short-term capital for your needs, for your business needs, and then continue to grow Mintos. So you give up less equity, basically as of this time being, and then later on, you can offer it basically for a much bigger worth and for a much better share price. Can you take something about this?
That is a trade-off, obviously, which you have to make, and that was something which we also, when we saw that there is so much interest, is something which we discussed internally quite a bit, and that is also the reason why we cut short the campaign. So initial campaign was actually idea was to keep it open for 20 days. So we cut it short in half. So we actually finished at 10 days because at one moment we realized, okay, it doesn't make sense to raise more. And the trade-off is really, I guess, sure, you give up more equity in a way, but then of course you get the cash. But more so, what we saw also that there's a lot of investor interest. So there's a lot of people who actually would want to be part of the Mintos journey. And then basically what we saw, okay, we want to give this opportunity. Also from the business perspective, of course, having more investors on board, then that's in a way also kind of a marketing exercise. So you get people who can then maybe spread the word among their friends and acquaintances. So it's not that only you can only look at the cash or the dilution which you get. So it's other things which we also took into consideration, and we basically just wanted to give the opportunity to all people who wanted to participate. So we think that most people who wanted, they got the chance to participate. We don't know if we will ever run again another campaign, so better to give it this opportunity. And sure, with a valuation, always you can think it could be give up less or more, but then also cash is cash, so that also helps us to execute on our vision. And if we now look at the world which we live into now, it's still uncertain world, so we don't know how it's going to go like in 2021. So if it's the pandemic going to subside, it's not going to, so how the vaccination going to go on. So these are all the things which you have to take into account. And then basically we decided, okay, we will stop at 7 million raised. Basically that's what we decided internally, by giving up basically around 9% of the company.
Okay. As I said, you plan obviously to finish up this fundraising round with a much bigger venture capital round, which is about to follow very soon. You said it quite often. How much equity do you want to offer additionally? And also which funding volume do you expect in return then?
Funding volume also, that's something which we have discussed here and there. Is around like 15 million euros is something which we are looking to raise from the venture capital. Obviously 15, that depends. 1.5, yeah. It depends, of course, on the interest. It could be more. It could be, if there's less interest, it could be less. But definitely doesn't make sense just to raise like a few million in our stage. So it's basically going to be like around 15, or then we just decide, okay, it's not the best time now. But basically, we can go out and raise funding from venture capital, and when we get the licenses, so that we can take that off the table, and that doesn't affect kind of negotiations. And then also that gives us a stronger position when it comes to the valuation. And valuation, well, it's going to be negotiation and kind of the discussion which we will have as a part of our process in raising the funding. Obviously, valuation is important, but that's not the only important thing. So there are many other things which you have to look at, like what is a fund, what their experience, what about the controls, and plenty of other things which you put on the table when you basically think about the fundraising. So that's is earmarked for the early next year when we get the licenses, and let's see how it goes. So far, the feedback has been good, but obviously, as with any other fundraising, so you can say that there's interest only when you get the funds in your bank account. So everything up to then is, well, basically just discussions.
And can you quickly comment also on how much equity ideally you plan to give up or to offer for those 15 million euro in return? Will that strongly correlate to what the crowdfunding campaign was then?
Yeah, well, it's obviously as a company, well, it still will be perhaps a few months or half a year between then and when we raise. So if you get a bigger organization and we get the license, so one would expect that the valuation is higher. So it's definitely would not be lower. So most likely would be higher, but it's very premature now to say like about valuation. So let's see how it goes. Let's see what's how much is like real interest out there. So and then we can discuss. So valuation is, in a way, you want to optimize for the valuation, but then on the other side you also want to just get it done, so that you can go back to the business and invest in executing your roadmap. So definitely we'll keep an eye. I know with 7,000 investors on board, of course, the less dilution they have, the best. And us as early co-founders and our angel investors, obviously also we look at the dilution. So it's a rather complex equation which you have to look at when you kind of consider one offer versus the other offer, and it's not only valuation.
Is there any limit in terms of how much equity you want to give up?
I think it's more limited from the perspective of how much money you want to raise. So we see that for our roadmap to execute on that. So it's perhaps at this stage, something like 20-25 million is something that what we would want to raise at this moment. More than that, then that would mean that basically we raise capital, which is then sitting on our balance sheet and is not used. So basically you perhaps are overfunded, which is another kind of consideration where you don't want to go into. So it also doesn't make sense to raise like too much capital.
Okay, understood. And very last question now to finish up this fundraising discussion. When do you expect to close that second funding round then with a venture capital fund?
We're going to start early next year. So let's see when we get the license. So our current estimate is that we should get them in Q1 next year, maybe Q2. And then it's going to depend on kind of the process with the venture capital funds. So it's hard to give like exact timeline. So usually people say perhaps like 3 months, maybe 4 or 5 till you get to the closing. But in our interest, well, as for any other company or startup, you're just gonna want to get it done so that you can get back to work and basically build a company instead of run around in endless meetings and discussions about fundraising.
To which extent is that licensing a necessity before finishing off that negotiations with a venture capital fund? So is that something like to have additional security, an additional increase of the worth of the security, or because you mentioned now a couple of times it will happen only after the licensing process? Is that a necessity from the counterparty in most cases, or why is that?
It just gives you more power in negotiation. So basically, well, you have the one item off the table, so there's no uncertainty if they're going to be licensed or not. So, and especially when you have like one party which is investing like considerable amount of money, so that for them it might be an kind of a prerequisite to invest. There's no kind of prerequisites now, but basically we just see we are so close to getting them that it doesn't make sense now to kind of go out and try to raise before, and then still the question will be like when you're going to get the license.